I mean, if you were to see silver at the end of the year at $96, it would not be crazy at all. And if you take 42.40 and divide by 7, it's going to be somewhere around $600, 605. As insane as that sounds, that would match the geologic footprint right now. So yeah, I think silver is the asset of a generation. And I want to always hammer it home. I'm not telling people to buy it to become wealthy. It is wealth. And the biggest money in the world is showing you that. The sovereign wealth funds and the central banks, who have now largely reclassified silver a critical mineral. The U.S. government has. The EU did it in 2023. China just did it, and they are restricting exports. And China, as we've said ad nauseum on your show, the second largest producer in the world, is flying to Peru and Mexico and buying doré and concentrate, paying twice what the rest of the world will, and ship it back to refine it. If they're the second largest producer, then why the hell are they doing that? Because it's worth far more than the currency used to buy it.
Andy Schectman has been one of the most outspoken voices cautioning that the physical supply chain is under increasing pressure, as the precious metals market has shown rising symptoms of stress in recent weeks. Schectman claims that what we are seeing is a more profound change taking place behind the scenes rather than a typical variation in demand or price. Owning actual physical metal is clearly preferred by retail investors, family offices, and even institutions over paper contracts or exchange traded funds. Wait times are getting longer, premiums are still high, and inventories of well-known items like silver eagles are getting smaller, all of which indicate that the supply of metal is getting harder to get by every week. At the same time, Schectman identifies one of the most concerning aspects of the current system as the gap between the paper markets and the real markets. Although pricing on large exchanges could seem stable or range-bound, the actual situation on the ground is often different. Vaults are emptying more quickly than many anticipated, large amounts of metal are silently flowing east, and reliable supply sources are losing their dependability. Don't forget to like, subscribe, and ring the bell for the latest analysis on gold and silver markets.
The December delivery month, and there's already been 23,970 gold contracts that have stood for delivery. That's 2.397 million ounces, and plus 8,305 silver contracts, or 41,525,000 troy ounces issued and stopped so far, and the month has just started. It's also relevant to note that in November, which I would say was not normal, the silver deliveries ended the month at just under 20 million ounces, about 19.7 million, which it's really crazy because November is not a scheduled delivery month for either silver or gold. There was 1,267,000 ounces of gold delivered. Issued and stopped is the correct terminology. But, you know, the first day, this month, the December contract, Day one, we saw 7,330 contracts stand for delivery in silver, which is 36, almost 37 million. That's more than $2 billion worth. And although it's not a record, it's close to it. April was the biggest record of just under 12,000 contracts. But to see a 2-day, that's day one, and 2-day obviously added more, but it's just insanity where there's already been 2.4 million ounces of gold and almost 42 million ounces of silver delivered in 2 days. This is the same type of volume that we've seen all year long. And, it's funny, you and I started talking about this in 2020 before anyone did. And now it's just mainstream mainstream in our business. And I think this will continue until it doesn't, meaning until stuff is just depleted and it's becoming more and more obvious that this is an imminent deal. At the same time, you have one of, if not the largest short position in COMEX futures market, along with a massive short position in SLV, one of the largest ever. And at the same time, you have the LBMA, which is running on fumes. And, it's a situation where the delivery via mechanisms are breaking down. Almost 90 million ounces have been delivered off of COMEX this year. And, since October, pardon me. And I don't know, since October 1st, 90 million, it's accelerating at a level that I don't think people understand or take for granted. And I think the way that you break that up is just to simply say that, let's make an analogy, right? For years, everyone pretended that, let's call it a cardboard box was full of cookies. There's a picture of a cookie on the outside, and the thing of it, and they would trade that. But now everyone is saying, no, I want the cookies. And people are realizing that the box is pretty much empty. And when that happens, this pretend cookie game, which you could call the derivatives, falls apart. And real cookies, gold and silver, become much more valuable. And that's why prices are rising. And why the dollar and other currencies may look weak when the truth comes out. So, yeah, I think it's a big deal. There was this report that JP Morgan shifted its offices to Asia in the middle of the night, that they were told that the people had like 5 days to move their family and everything to Singapore. I believe that is false. So everything that I'm reading tells me that that's not true. I guess we'll find out and we will see, but I know a lot of people have been asking about that. The bottom line, then again, to me, is that the market runs on trust. And when you believe that you'll get delivery of what you were promised, and that trust has been built up over decades, then the system works. And you buy a contract, you can stand for delivery. The metal's there. That's why COMEX has set the price of gold and silver forever. And the analogy is like a bridge that handles a whole bunch of weight until it doesn't, like the 35W bridge in Minnesota that collapsed that I drove over 5 million times. And you're seeing that in London. You're seeing that in the COMEX now. And I don't know. I think that this is going to be a story that gains a lot of traction over the coming weeks and months. I think that the price of silver is just beginning. I really, truly, truly do. And that nonsense of a outage, a glitch and an outage of air conditioning at the CME, a cooling failure, is a bunch of crap, because only the metals markets went down. The other CME markets, like the bonds and the FX and the repo and the equity futures, well, they stayed online. It was a technical failure isolated to only one asset class and low volume that day, yet the whole thing went down. To me, it just is telling you that things are breaking. And I don't know, I think that this is just the beginning. We saw 12.5 million ounces were transferred out of the COMEX registered category on November 26th. So, where's it going? Who's buying it? How caught are they? These are the things that I would be focusing on right now. To me, that's the most important thing to talk about today.
As confidence in these paper-based marketplaces declines, more focus is shifting to locations like Shanghai, where transactions must be fully backed by verified and delivered real metal. The Western system, where paper contracts frequently exceed the quantity of gold and silver that actually exist, contrasts sharply with this tangible, visible paradigm. The question of which region will eventually manage actual price discovery in the future has been a significant topic of discussion due to this expanding disparity. At the same time, available supplies are continuing to decline while demand for physical metal keeps rising. It is evident that the supply-demand balance is under significant strain when one considers reports of significant delivery requests, aggressive purchasing by sovereign bodies, and rising industrial demand. Analysts like Andy Schectman caution that if even one significant institution is compelled to give up its sizable short position, it may set off a swift chain reaction that would drive prices skyrocket and reveal the weakness of the current system. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.
On Friday, when silver was breaking out to a new all-time high monthly close, that's when all this shenanigans seemed to happen, when the trading was halted for 11 hours on the COMEX. Any comments from you about that?
I would just simply say that if a market loses trust in how prices are discovered, or if it can quickly shift the rules, so too will the price discovery. It will shift elsewhere. And to me, all roads lead to the same place, and that's Shanghai, which becomes the price mechanism for physical silver. It will take over for the COMEX. And when you play these games, we've seen it now in London with the nickel market. We're seeing it here. It's what they did to the Hunt brothers. They changed the rules. They'll raise margin requirements. They'll do all of these things. But when you end up seeing, a failure of trust, a massive breakdown in trust, I believe that shift will happen. And, it will kind of be like London losing its grip on oil pricing and move to the NYMEX. And, they ran it for a long time. Now they're an afterthought. The same thing will happen here. I believe that the world will be so angered, if you will, by the fact that this has been a game that has been played for a long time by the West, that it will move to the part of the world that, the center of gravity will move towards Asia, I guess is what I'm trying to say. So yeah, I think that's going to happen. I don't know when, but ultimately in a world of probabilities, I'd put a high level of certainty on that at some point it just moves to the part of the world that is cash and carry instead of promises and rehypothecation. In other words, you buy in Asia, you pay your money, you get your bars, and out you go. And before you buy it, you have to buy a bar from one of the pre-approved refineries, and they laser etch the number of the contract that you have on that bar. There is no shenanigans there. It's all about shenanigans here in the West. Well, it's interesting. The technical analysis would say you take the cup and handle when it breaks through the handle, which it has at over $50, that you take the top of the cup in 1980, which was 50, the bottom of the cup, which was $4 in the 90s, and the difference is 46. You add it to the top, and that would say $96 would be the next technical resistance level, if any, or that would be the projected next place to go. And if you take a 42-to-1 ratio right now, or even call it 45-to-1, where it's averaged for the last 100 years, the silver to gold ratio, even though it's been coming out of the ground for 5,000 years, it's 16-to-1, and now it's 7-to-1, meaning it's depleting in nature. The price ratio, largely because of, in the Western world, gold's role as a monetary metal and silver's role in industry, it's average about 45-to-1. So you take gold today at 42.40 and divide by 45, and what do you get? 42.40 divided by 45 is $95. Well, isn't that interesting? That would be where it would tell you to go, where you take the top minus the bottom, which is 46, add it to the top, that would say $96. So, I mean, if you were to see silver at the end of the year at $96, it would not be crazy at all. And if you take 42.40 and divide by 7, it's going to be somewhere around $600, 605. As insane as that sounds, that would match the geologic footprint right now. So yeah, I think silver is the asset of a generation. And I want to always hammer it home. I'm not telling people to buy it to become wealthy. It is wealth. And the biggest money in the world is showing you that. The sovereign wealth funds and the central banks, who have now largely reclassified silver a critical mineral. The U.S. government has. The EU did it in 2023. China just did it, and they are restricting exports. And China, as we've said ad nauseum on your show, the second largest producer in the world, is flying to Peru and Mexico and buying doré and concentrate, paying twice what the rest of the world will, and ship it back to refine it. If they're the second largest producer, then why the hell are they doing that? Because it's worth far more than the currency used to buy it. The prices are wrong. They've never been allowed to reach full price discovery when you have the largest concentrated commodity, concentrated short position of any commodity of the 1,000 plus traded on COMEX for years. It just speaks to the why. Why would it be the largest short position in this tiny little commodity? It's not for these banks to make money, is it? Sure, they do, but is there something bigger behind it? And we've talked about that forever. So yeah, what we're witnessing right now is the inability of the players that have used the Western dominance, which is big checkbooks, big pockets of cash, to continue to suppress the price naked. It's now an existential threat. And you're seeing that. The rumor is the reason they stopped is there's one big trader who took possession and would not roll it over a stamp for cash delivery, perhaps an Asian trader who wanted over 400 million ounces of silver. Give it to me. And so, all of a sudden, the cooling breaks down over Thanksgiving in one of the most thinly traded markets of all. So there's virtually no activity, but just those servers broke down. Right.
Furthermore, silver has had one of the most concentrated short positions of any commodity on the COMEX for many years. This indicates that significant institutions have placed large bets on the price either remaining low or declining. According to Schectman, this has contributed to long-term price suppression. However, the capacity to manage the market is now starting to falter. There are also speculations that a large customer, presumably from Asia, recently insisted on receiving actual physical delivery, possibly hundreds of millions of ounces, instead of rolling over their paper contracts. Around that time, during a very quiet trading period, the exchange abruptly encountered technical problems. He reveals what has been hidden for years by comparing the current situation to the tide receding. As Warren Buffett famously observed, additionally, Schectman thinks the image that will surface might be startling. A domino effect might start if even one big bank breaks ranks and rushes to cover its short holdings. In a short amount of time, the price of silver may rise sharply as more people followed in a frenzy to obtain genuine metal. Andy Schectman sees this as more than just a trade or conjecture. pressure. Silver is already a kind of real money and genuine protection. It is not something you purchase to get rich. The largest organizations and governments in the world are discreetly taking action, while the majority of people are still unaware of what is going on. According to him, the world is at the start of something really significant. The system is losing legitimacy and confidence is eroding. For silver, this is just the beginning of the story, not its conclusion. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and turn on notifications so you're always up to date. Thanks for watching.